Welcome to the EXTG educational webinar again. Today we'll be talking about Fibonacci and the Fibonacci trends. This is a topic that we've wanted to do for a while, and it's a very large topic, and but I'm going to discuss about Fibonacci trends and how we can pull up some trends. So if you don't know anything about Fibonacci's, you're going to learn quite a bit. And it's going to be a method that you're going to understand and you're going to use in your daily trading strategies. Okay. So just a general advice disclaimer, as per normal, I've got to read it out for the people that have called online. This presentation is aimed to be educational in nature and should not be solely relied upon as a recommendation or invitation to enter into a particular transaction or to apply a particular trading strategy. You should not engage in trading unless you understand the nature of the relevant markets, the rules and applications of these rules to the strategy and strategies you are trading, the products and the full extent of your exposure to the risk of financial loss. If you are in doubt, you should seek professional advice. The advice contained on our site has been prepared without taking account of the objective financial situations or needs of any particular client. And because of that, clients should, before acting on advice, consider the appropriateness of the advice, having regard to the client objectives, financial situation, and needs. And you should know that EXTG clients are required to read all product disclosure statements, 3 in total. Okay guys, welcome again, and why listen to me? I'm a member of many Forex societies, been trading the markets over 12 years now. I've traded with many professional traders and firms and others for the past 9 years. I should add in here, I've also been doing this group for a few months now, and a bit of experience as a webinar. That would be a good thing to write. I've taken lessons. I've been able to piece some good cost and strategies of that we can use and that I provide you guys. You guys asked for this. This is why I do it. I have the gift for teaching and tuitioning people. I love helping teaching people, and I've had a great success teaching and tuitioning people in many ways throughout my life. So that's pretty much me. I've worked for many investment banks in the past, and now I work and I help tuition people in trading. All right, let's talk Fibonacci. Let's get down to the crust. Okay, we'll be using Fibonacci ratios a lot in our trading, so you better learn it and love it like it's your football team. Fibonacci is a huge subject, and there are many different Fibonacci studies with the weird sounding name, but we're going to stick to 2: retracement and extensions. Fibonacci is also known as Fibs. But first, let me introduce you to the Fib man himself, Leonardo Fibonacci. Leonardo Fibonacci isn't some famous pizza man. Actually, he was a famous Italian mathematician. He had an idea, and he discovered a simple series of numbers that created ratios describing the natural proportions of these in the universe. So, what are Fibonacci? It's a trend trading tool. It provides us with key support levels. The 3 most important levels. Take note of these, guys, these levels, if you've got a pen and paper. 38.2, 50, 61.8%. Okay. The ratios arise from the following numbers series: 1, 1, 2, 3, 5, 8, 1, 3, 21, 34, 55, 89, 144, so on. The series of numbers is derived by starting with 1 followed by 2 and then adding 1 plus 2 to get 3. The third number then is adding 2 plus 3 to get 5. The fourth number is so on and so on. So I know you're thinking, oh, what are all these numbers and stuff? I thought Fibonacci was much easier than this. Well, it will get easier than this. I've got to first explain to you the background of Fibonacci and what it is and what the numbers derive and what they mean to actually show you how Fibonacci levels work. Okay? So after the first few numbers in sequence, if you measure the ratio of any number to the succeeding higher number, so from the bottom to the top, you get 618. For example, 34 divided by 55 equals 618. If you measure the ratio between the alternate number, you get 382. For example, 34 divided by 89 equals 382. And that's as far as into the explanation as I'll go. The ratios are called golden mean. With all those numbers, you could have put an elephant into sleep, and you could have put you to sleep, I think, with all those numbers. Alright, so we'll continue a bit about the retracements here. Fibonacci retracement levels. So you got 0.236, 0.382, 0.5, 0.618, and 0.764. Okay. Fibonacci extension levels. 0, 0.382, 0.618, 1, 00, 1382, 1618. Now, don't get confused with all these numbers, okay? The juicy part's going to come in. Okay, as I've got here, you won't really need to know how to calculate all of this. Your charting software will do all the work for you. That's the good thing about using MetaTrader 4. So I'm going to show you how it calculates for you. Remember, the port and key levels, I use the 38.2, 50, and 61.8. Since so many traders watch these same levels that I have and place buy and sell orders on them, the support and resistance levels tend to become self-fulfilling prophecy. Traders use the Fibonacci extension levels as a profit-taking level. Again, since so many traders are watching these levels to place buy and sell orders to take profit, this tool tends to work for me more often than not due to self-fulfilling expectations. Most charting softwares include both Fibonacci retracement levels and extension level tools. In order to apply Fibonacci levels to your charts, you need to identify swing high and swing low points, which I will show you. So this is the Fibonacci retracement. This is a daily chart of the AUD USD here. A swing high is a candlestick with at least two lower highs on both the left and right of itself. A swing low is a candlestick with at least two higher lows on both the left and right of itself. Don't worry, I'll explain what this is and what the extensions are, and most importantly, how to grab some pips using Fib tools. So I'll draw it with my pen here. You got two highs, and let me just change my color. I like this light blue color. Okay. Over here, you got two highs, and over here you got two lows. So that's your low, and you draw a line from up there to the high using your charting software. And then you do the calculations of the fibs here for you. Okay? The first thing you should know about Fibonacci tool is that it works best when the market is trending. So this is a trend that you're seeing across here that's occurring. Okay, the idea is to go long or buy on a retracement at a Fibonacci support level. When the market is trending up and to go short or sell on a retracement at Fibonacci resistance level when the market is trending down. In order to find these retracement levels, you have to find the recent significant swing highs and swing lows. Then for draw trends, click on the swing high and drag the cruiser to the most recent swing low. That's what we've done here. I'll do it on MT4 to show you guys how it's done. For uptrends, do the opposite. Click on the swing low and drag the cruiser to the most recent swing high. Pretty easy. Now let's take a look at some examples on how to apply the Fibonacci retracement levels. So I've drawn an example here. I'm going to erase the drawing and I'm going to redraw it. So you find two bottoms and you draw a line from there all the way up until you find two tops with your Fibonacci. I'm going to pull up my MetaTrader. And with MetaTrader, you got to look for two bottoms. So two bottom lows are here. We can even say here two bottom lows. It's not really a low, but yeah, it's a bit off. I like this level actually. And two tops. We'll say here and here for argument's sake. Okay. This is on the pound USD at the moment on a 5-minute chart. 15 minutes or higher is best to use Fibonacci. We then go to insert on our MetaTrader Fibonacci Retracement, and we draw a line up to here. And there, my friends, you can see your retracement levels of a Fibonacci. Okay. There we go. So 2 points on the bottom, 2 points on the top. I'll draw it again just to show you guys how it's done. I go to my MetaTrader, I grab the retracement, I find two bottoms, I see the red line going through the middle of the trend, and I find a top high. Here we go. There's your Fibonacci levels. Very, very simple. Okay. So, here we plot the Fibonacci retracement levels by clicking on the swing low and the swing high, and I showed you how to do that. Now, I want to show you guys how it works. Okay, as you can see from the chart, the retracement levels were 79.55. Okay, you've also got which is at 23.6%, 77.64, which is at 38.2%, and 76.09, which is at 50%. 74.54 at 61.8%, and 72.63 at 76.4%. Looking at these charts here. Now the expectation is if the AUD retraces from the recent highs, it will find support at one of those Fibonacci levels because the traders will be placing buy orders at these levels as the price pulls back. Now let's look at the chart and see what happens after swinging on the high. What occurred. So the Fibonacci level, I'll draw it again, was drawn from here to here. What happens, it's just bouncing. It's bouncing off that level. It actually broke it, but the Fib 38 level here held it, and it went back up. Okay, so the price pulled back right above the 23.6 level, continued to shoot down over the next couple of weeks. It even tested the 38.2% level, but was unable to close it below this level. 38.2% is a very strong level, guys, and the 50s, as I said at the start, the strong levels. Okay. Later on, around July the 14th, this is an old chart. the market resumes its upward movement and eventually broke through the swing high, clearly buying at the 38.2% Fibonacci level, which have been profitable long-term trade. So if you did this trade, you would have done a very, very profitable long-time trade. So as I said, that's a clear example that the 38.2 is a very strong level. I want to show you now, guys, how it works with a downtrend. Okay, with a downtrend. Now let's see. We use a Fibonacci retracement tool during a downtrend. Below is a 4-hour chart on Euro USD. Okay? So I'll go to the 4-hour chart, Euro USD for you. Sorry guys, something's just totally gone on. Give me a sec. There we are. There we go. So we, as you can see, we found on our swing high 1 spot 4195 on January 26 and our swing low at 1 spot 3854. A few days later on February the 2nd, the retracement levels 13933. 23.6% was the level. At 13983, 38.2%. There it is again. 14023 at 50% and 14064. Just want to draw this again and show you the levels. The expectation for a downturn is that if the price retraces from this low, it will encounter resistance at one of the Fibonacci levels because the traders will be ready with the sell orders there. So practically it's saying if it's going to bounce off, that's a Fibonacci you draw, if it's going to bounce off and hit these levels, 38, 50, it's going to hit them and they're going to drop further down. That's what it's saying. Now let's take a look and see what actually happened. There you go. It hit the Fib 50 level, a key point. It creeped up and then it hit the key level and it dropped down. Okay? Isn't that amazing? The market did try to rally. It stalled below 38.2 for a little while because that's a strong level. Before testing the 50% level, if you had some orders either at the 32% or at the 50% levels, you would have made some really good pips. So if you had some short orders at the 38 or the 50, you would have went bang. And the 38 is a really good order place. It's very strong. I think it's the 38 is stronger than the 50. The reason being that if it chases away from you, you're backed up by the 50. And if it goes for you, you've made it in. You've made it in from the 38. So it's it's a pretty strong order. In these two examples, we're seeing that the price found some temporary support or resistance at the Fibonacci retracement levels. Because all the people who use the Fibonacci tool, those levels become self-fulfilling, support and resistance levels. One thing you should take note of this, that the price won't always bounce from these levels. They should be looked at as areas of interest. For now, there's something you should always remember about using the Fibonacci tool, and it's that they are not always simple to use. If they were that simple, traders would always place their orders at Fib levels and the markets would trend forever. So they do break those kind of Fibonacci levels on different theories, on Elliott wave theories, on different resistance levels. Every trader's got a different method of trading. Fibonacci levels also do break on fundamental news. It's like nothing to it. But on a normal trading, it's quite good. You can actually use it on fundamental news, on news trading. You can actually use a Fib, and you can do quite well with a Fib, with a Fibonacci. Placing stops with Fibs. I want to show you how to place some stops with Fibs and earn some pips with this Fibonacci tool. Okay. Okay, using a stop loss with Fibs. Probably just as important to know where to enter or take profits. It's knowing where to place your stop loss. We can all agree with that. You can't just enter a trade based on Fib levels without having a clue where to exit. Your account will just go up in the flames. You'll forever blame Mr. Fibonacci, you blame me, and you blame everyone else. And you'll be cursing this all in Italian. In this little segment, you're going to learn a couple of techniques to set your stop loss where you decide to use them, and use the trusty Fib levels. These are simple ways to set your stop and rationale behind each method. Collins asked a question, I'll answer it shortly. The first method is to set your stop loss past the next Fibonacci level. If you were planning to enter at 38.2 Fib level, then you would place your stop beyond the 50% level. If you felt like a 50% level would hold, then you'd put your stop past the 61.8% level, and so on and so forth. Collins asked if Fibs good in all time zones. Colin, Fibs, yeah, they work in all time zones. Okay. The reason what you have to find in the Fibonacci in all time zones is you have to find the key thing you must circle is this. That there. I like using the 15-minute chart for Fibonacci, but I have it, if I'm doing a fundamental news trade, for instance, I'll have Fibonacci set on a 1-minute chart, a 5-minute chart, and a 15. And I can kind of picture and align it all. I'll have it open on 3 separate windows. The 4th window I have open will be my order window, where I execute my trade. But it's very important, as I said, to have these levels down pat on a Fibonacci. Because if you're over here, your retracement level is going to be a little bit off. You know? I mean, you're roughly going to know where the levels are, but you're going to be a bit off. Okay. So, if you shorted at the 50 level, over here, I'm going to delete my my drawing, my Picasso, I should say. If you short at the 50 level, you could have placed your stop past the 61.8% level. So we shorted at the 50 level here. We can, and we're hoping that it's going to bounce to go down. We can actually put a stop loss around this level here. Okay, anywhere in there, wherever you're happy. But I'm going to tell you another strategy that I use in placing stop losses. Okay. The reason behind this method of setting stop loss is that you believe that the 50 level would hold a resistance point. Therefore, if the price were to rise beyond this point, your trade idea would be invalidated. The problem with this method of setting stops is that entirely dependent on you having a perfect entry. Setting a stop just past the next Fibonacci retracement level assumes that you are really confident that the support or resistance area will hold, and as we pointed out, sometimes it's not going to work. The market might shoot up, might be fundamental news analysis, it will hit your stop and eventually go in your direction. This is usually when we'd go to a corner and start thinking and hitting ourselves against the wall. I'm just warning you that this might happen sometimes and a few times in a row. So make sure you limit your losses quickly and let your winners run with the trend. It might be best if you use this type of stop placement method for short-term intraday trades. Now, if you want to be a little safer, I know another way that you can place your stop losses. Okay, it's to place them past the recent swings, highs or lows. So here, there we go. The exact same chart, stop loss has changed. This type of stop loss placement would give you your trade more room to breathe and give you a better chance of the market to move in favor of your trade. Okay. So, then comes the next question. The truth, you know, if the market price were to surpass a swing high or low, it may indicate that a reversal of the trend is already in place. this means that your trade idea or setup is already invalidated and that you're too late to jump in. Setting a larger stop loss would probably be the best used for long-termers, long-term traders, swing traders. You can even use it for day trading, but it comes with one condition, of course. With a large stop loss, you also have to remember to adjust your position size and risk accordingly. So a smaller position size. This can also lead to some unfavorable risk-reward ratios, as you know. So you just got to really stick with it. Okay. So which way is better? The truth is, just like combining the Fibonacci retracement tool with support or resistance trend lines and candlesticks and find a better level. It would be best to use your knowledge of these tools, analyze the current environment to help you pick a good stop loss point. As much as possible, you shouldn't rely solely on Fibonacci levels, support or resistance points as basis for stop loss placement. Remember, stop loss placement isn't a sure thing, but if you can tilt the odds in your favor by combining multiple tools, which I've showed you in the past, it could help you give you a better exit point and entry levels. More room for you to trade, more room for you to breathe, and possibly a better reward risk ratio, and that's what you want. So that's my topic on Fibonacci's. I'll go through a quick one again on the platform, and we'll pull up a pair. Anyone want to do a Fibonacci on a certain pair? We got a certain pair. Can anyone want to type in a certain pair? I got an excellent pair. I'll type it in for you guys. Euro USD. This pair has been driving a lot of people mad at the moment with the recent release and what's going on. Okay, so we'll do a Fibonacci retracement on Euro USD on a 15-minute chart. So Euro USD, 15-minute chart. Here we go. So we're going to find a bottom. Looks like I found my bottom. My bottom looks nice over here, and obviously a nice top over there, so we can draw Fibonacci straight across there. Okay, so let's do this. So we go to Fibonacci retracement, right in the middle here, smack bang, and right in the middle there. There's our Fibonacci levels. So what we're saying here, that the Euro USD, and look at that guys, this is a nice clear example. 38.2, 38.2. You know, the 50 level, look at that, held off on the 50 level too. So what's happening here, it's saying the Euro USD, it's going to drop, if not bounce off the 23.6, so you can put a buy order there. You can put another buy order here. And hopefully it goes again, and you put another buy order here. So there your Fibonacci levels. Now looking at Fibonacci level, 100% over here, meaning that it's clear, that it's unique, meaning it's level. Looking at Fibonacci levels on a pair such as Euro USD, which is getting totally flown over the place by technicals and fundamentals at the moment. If some news release, this thing just shakes. At the same time, it wants to run off technicals like it is doing now. But if a news release comes in and it's not in favor of the euro, these Fibonacci levels aren't going to hold, because fundamentally it's going to be much stronger. But you can actually see that it is holding now, because the news that came out the other day about Greece's GDP being cut until 2020. So that news has already occurred. So now the market has done its spike up and spike down, and now it's trending its via technical analysis again, unless data starts coming out again. It doesn't have to be that kind of data. It can be US data that's coming out, like existing home sales that's coming out tonight. If that data comes out and it's that can move the Euro USD, because it's the Euro USD's got the USD pair in it. So that was a good example. So that's my topic on Fibonacci's. And I hope you enjoyed it. I'll be answering all open questions now.